Hello traders, Lance Ippolito here, and let me show you how market eternals can really help your trading. So the time right now is 10:42 a.m. Eastern Time. I just closed out of an ES long position from this morning, and I want to go step by step over the trade uh, to really zoom in on market eternals and how they can be beneficial. So we see the market, we gapped open lower about 4 points in the E-mini S&P futures, and we sold off about 4 points from the open to the lows. This is a 1 minute, this is a 5 minute, this is a 15 minute. This is my tickmaster indicator, which I do use every day. I made it, so therefore I'm absolutely in love with it, but it's not a necessity. If anyone tells you any indicator is a necessity, I would not believe them. So you could trade from looking at a volume chart, you could trade looking at a tick chart, you could trade just looking at an S&P chart if you would like. It's all preference. So what I like to do, I like to look at the 1 minute, 5 minute, 15-minute chart. What I noticed was the market gapped lower, moved lower. In the day, I saw negative ticks. You were seeing negative ticks basically all morning. Every time we got to zero, we rejected moving lower. I also noticed right at 2176 and a half, we had major resistance as we knocked once, we knocked twice before finally breaking out on volume. Remember, every breakout needs confirmation via volume. And we had that breakout right at 10:13 a.m. Eastern Time. So I always get asked, Lance, when do I get into a trade? And that is probably trade location, one of the number one problems traders have. Because if you got in the trade right at the open, let's say you say, wow, the market's down, this market only goes up, I'm going to get long. Well, you would have took about 2.5 points of pain and been in a trade for over 30 minutes. As a trader, I don't want to stay in a trade for 30 minutes and get chopped around. I don't think any trader wants to be in that. Just to finally get out your trade and the market moves in your position. That's no fun. So what I noticed was we finally had that high confirmation volume breakout. Well, I entered the trade right prior to 10 a.m. I believe right around 9:58. So right prior to 10 a.m. And that 10 a.m. is a big time level after the first 30 minutes of the trading day. So why did I get in the trade before this breakout to capture that move? Well, let's go into the market eternals, aka looking under the hood of the market. So the first thing I noticed was the trend. The trend was holding above 2 for a prolonged period of time at the open. And the trend cannot hold an extreme level, positive 2 or below 0.6 for a prolonged period of time. It's very, very difficult for the trend to do that. So once I see the trend hit really 2 or above, I know it has to come down, and therefore the trend is inverse to the market, so to the equity market, the S&P. So when we have the trend coming down, we have the S&P go up. So once I see the trend above 2, a light comes on in my head, and I know that the trend has to move lower, therefore the market should move up. So right at 9:55 a.m., I see the trend breaking 2 to the downside, moving lower. I see the advanced decline line, what I also look at right here at 9:55, start moving higher off the lows. Now we didn't hit a negative 1500 in the advanced decline line, which I consider a major level. So we did not even get there. So right at 9:55, we start moving higher. And we see a beautiful rally in the advanced decline line. We see the trend sell off. And what happened to the market? Well, we had a high volume breakout to the upside on positive ticks. I believe we hit positive 800 a few times in the ticks, which is aggressive buying. So therefore, I closed out my trade right around 2180. I believe I entered right around 2175 and a half and 2175 and a quarter. So I rode that nice trade up, got out on those aggressive tick readings because I don't want to be in a trade while the ticks are just flirting around zero. I want to take targets on aggressive extreme tick readings preferably positive 800 and above, because I want to get out literally right at the top. So right when all the machines hit and they're buying every contract they can, I want to start taking targets when I see aggressive tick readings. And this is how market eternals can signal a market reversal. When we're looking all gloomy. I mean, if we just look at this, you know, this morning, this is just looking all gloomy, right? We're just saying, oh, we're going to major break down and take out the lows and flush out. Well, no. Through the TRIN, through the advanced decline line, and through the ticks, we truly saw how they can foreshadow a market move to the upside. And these are moves that are relatively simple. A simple risk versus reward setup. I had a set stop in, actually. I had a set stop here at 2173 and a half, because I knew if we took out these lows, we were going to flush lower. So I'm basically risking 2 points to make 5 points or more. If I was trading, 20 contracts, I could still be holding on to some contracts. I could have took targets and held on to some. So, relatively low risk, very very beneficial risk versus reward setups by using market eternals. Lance Ippolito here, Lance Ippolito here. You can find me at tradingcoachlance.com. You can shoot me an email, lance@tradingcoachlance.com. You can follow me on Twitter, Lance Ippolito. Subscribe to YouTube, Lance Ippolito. I mean, just a beautiful, beautiful market move this morning. I'm totally in love with this market. You could say what you want about low volume, not trading opportunities. Well, for me, and for the past month or so, every day has been an opportunity to make profit in this market.